Do you know that you can wake up tomorrow to invest in a US stock on platforms like Bamboo and realize that your account has been suspended and it's your fault? In today's video, I'll be explaining day trading with platforms like Bamboo and why your account can actually get suspended. Now, if you're looking to day trade on these stock brokerage platforms like Bamboo, Trove, and Co., there are three things you should know. The first one is the good faith violation. The second one is the free riding, and then the third one is the PDT rule. I am going to explain the three of them. Normally, when you sell a stock today, you're supposed to wait one business day for the money to settle into your account. Then you can withdraw the money or use it to buy another stock. But sometimes, maybe you sold the stock initially because you want to buy another stock. So you go ahead and buy a different stock with it and then try to sell it the same day again. If you do that, Bamboo is going to flag your account for good faith violation. Again, this happens when you sell a stock today. That same day, you use the money to buy another stock. After buying that other stock, within like 2 or 3 hours, you now want to sell the stock again. If you try to do that, that would be a good faith violation because you're basically trading with unsettled cash. And because of that, your account will get flagged. And if you do it 3 times in 1 year, you'll be suspended from trading pretty much. That is what good faith violation is. The second one is the free riding. Free riding happens when you deposit naira or dollar, doesn't matter, into your account today. You buy a stock and then a few hours later you want to sell the same stock that you just bought today from the money you deposited today. It's not allowed, right? The best thing to do would be to use the money in your buying power. The money in your buying power or your brokerage wallet is different from the money you deposited today. So if you want to buy a stock today and sell it today, use the money in your buying power, not the money you deposited. If you try to use the money you deposited to buy a stock and then you try to sell the stock the same day, you'll be flagged for free riding. Now, some platforms will let you carry on with the transaction and flag you for free riding, but Bamboo will pretty much warn you that, it's not allowed because they don't want you to get flagged. Again, Bamboo did not make these rules. These are actually trading rules and they apply to pretty much every platform out there. Then the third rule is the PDT rule. I reached out to Bamboo about this and this is what they had to say about it. Basically, the PDT rule was created by FINRA and you are not allowed to make more than 3 trades within a 5 business day period. Now, if you make a 4th trade, you disobey the rule and make a 4th trade, you'll be flagged for it. And if you're flagged and your account balance is actually less than $25,000, you'll be restricted from day trading pretty much. So these are the 3 things you should know if you're looking to day trade with platforms like Bamboo. I am going to be sharing more tips like this to help you understand why you can't sell some stocks or why your account was suspended. So be sure to follow me and I'll see you around. Bye.